We good? I'm talking. We're live? All right. Hello, everybody. Welcome back. 2024, January 8th. And today we're going to be talking about how to make money investing in real estate in 2024. 2023 was an interesting year with real estate investing, and um, we learned a lot. And 2020, 2021, 2022, right when the market started shifting, is when things got very interesting. We're here in Austin, Texas, but a lot of markets across the United States in 2023 saw uh, a downturn and saw a little bit of a contraction just due to uh, rising interest rates and how high home prices had gotten to. But what we see as the biggest opportunity in 2024, same as last year, I got some water, thank you though, is commercial real estate. So right now, we got a deal in Pace, Florida that we're buying with some of our investors. We've gone over this before. It's a retail strip mall. It's 10,000 square feet. We're buying it from a motivated seller. It's a distressed seller. It's not a distressed property, but it is a seller who is in distress. He needed to pull some of his equity out of the property, and he ended up getting a hard money loan on it. He refinanced it. He bought this a long time ago. Good property. He left a lot of opportunity for us to come in, add value to the property. But he refinanced it because he wanted to pull some equity out, him and his partner, and they refinanced with a hard money loan mid last year. And so when they did that and they refinanced with a 12% interest rate, interest only, or whatever it was, 12-month term, that is what caused some distress in order for him needing to sell the property. So we're picking this property up at a good rate. The property needs a little bit of work done to it, but not a lot. It needs a new roof. We're going to be doing some landscaping. We're going to paint the building, and we're going to redo some signage on the property. Hey, for future reference, it'd be cool if we could have the to where I could share my screen and show them. But anyways, we're buying this property for 1.45 million. Going in, it's about a 9.3 cap rate. We're looking at some good debt on it right now. We're getting LOI signed with tenants raising their rents, and these are good tenants. There's a pizza place that's been there for 17 years. There's a dog grooming place. A lot of these tenants, out of the nine that occupied the total 10,000 square feet, have been there for, I think over half have been there for 7+ years. So these tenants, they want to stay. It's a good location. Pace, Florida is a growing market. It's on an extremely busy street and highway. I think it's Highway 90 that runs through Florida. But anyways, we're buying it at a 9.3 cap rate going in. So it's already going to make money even if we didn't do anything to it. But we're going to improve the property and we're going to raise the rents on the tenants and pass back some of the triple net expenses that they should have already been paying for. And that is going to increase our cash flow by about 65,000 and add about almost $1 million worth of value to the property within the first year simply by raising the rents and passing back some of the expenses. And so this is the type of stuff that we're looking for in 2024. It was great here in 2020, 2019, 2021, and single family homes, duplexes, triplexes, quadplexes, especially in a market like Austin, where property values were appreciating insane amounts, 42% year over year from 2020 to 21 in June. We're seeing insane amounts of appreciation. And so buying these properties with lower interest rates at those values, and seeing that appreciation made a lot of sense. Even if the properties didn't make a lot of cash flow, even if they broke even or were slightly negative on cash flow, it didn't really matter because we were gaining, 100x. I mean, $100,000 plus per door in appreciation every single year. So if we lost $2,000 a year in cash flow per door, but we gained $100,000 in equity per door every year, we were net positive 98 grand per door. And so it made a lot of sense to do it back then. And we still have a lot of these really great properties that gained insane amounts of appreciation. But now, what I'd really like to do is take that equity out and go redeploy it into deals such as the Pace Florida deal. We're also looking at a 125 unit RV park outside of Dallas. We're looking at industrial real estate all over the United States, retail all over the United States, and multifamily all over the United States. There's been a lot more opportunity that I've seen within retail and industrial than even the multifamily. A lot of the sellers in the multifamily market still have not come down to reasonable prices to where they probably should be at today's time. So let's look at it. I'll tell you what we're looking at right now. We're looking at for retail. We're looking at 10,000 to 35,000 square feet in markets all over the U.S. For industrial, we're looking at 10,000 to 100,000 square feet all over the U.S. And for multifamily, we're looking for minimum of 32 units and average square feet per unit. Don't want it less than, we want it greater than about 750 square feet per unit, and all over the US as well. Now, some of the markets we're looking in are Houston, Dallas, Austin, San Antonio for some retail and industrial. We're looking in Phoenix, Arizona, in those submarkets, Denver, Colorado, in those submarkets, and different markets all around there. Um, Albuquerque, New Mexico, for industrial, uh, different parts of New Mexico, um, Florida, Virginia, Philadelphia, upstate New York, huh? Upstate New York. I'm going across the United States. North Carolina, South Carolina, Tennessee, Missouri, Kentucky, Chicago, those submarkets. Uh, what am I missing? We're not really looking at a whole lot in Louisiana. Uh, yeah, I mentioned Texas. Anyways, quite a few markets and submarkets across the United States. I actually watched a video on. I watched a video on Saturday about California, and I met a California investor. Matt and I did a couple weeks ago, and he was telling me how he's a broker in Cali, and he's invested in a few properties in Cali. And I was curious, if all the uh, all the hype about how investing in California is really bad for landlords, in the event that your tenants decide to not pay rent and you have to evict, whether on the commercial side or the residential side. He said that it is real. He said it takes, if someone stopped paying rent, the process to evict that tenant would probably take about 9 to 12 months to get that person out of your property. To go through the court system and do it, whatever the California laws are, it would take about 9 to 12 months to get that tenant out of your property. So we're not looking in places where that's the case. We're not looking in California, not looking in Washington, Oregon, and more so just that southeastern part of the United States. for the multifamily, and then for retail and industrial are looking at other parts on the East Coast and uh, in the middle of the United States. And we're finding a lot of stuff. I mean, there's a lot of stuff out here, and we're not just going out here and making offers for these properties at what they're listed at. We're looking for areas of opportunity. One of the main reasons why the Pace Florida deal is such a good deal is because within the first 12 to 18 months, we're able to add about $1 million worth of value to the property simply by going to the tenants and raising the rents and passing back triple net expenses that they should have already been paying for. So we're looking for things like that. We're not looking to just go buy a property in any of those markets that I mentioned and pay market value for the properties. We're looking to go in, buy the properties at a discount, add value in some sort of way to the properties, where that is uh, getting new tenants in there. Maybe the property is vacant. Maybe we need to update the property slightly, get a good tenant in there paying market rents. Uh, Bumping and raising the rents for the tenants up to market value. Um, bring in better management company, bring in a better leasing broker. We're looking to add value in some sort of way to the property. That way, we can create that delta, and and that's how we're going to make our money. We're not just going to pay market value for it. We're going to add value to it, and that is going to increase the value of the property, therefore increasing how much money we're making. Um, are y'all able to see comments and questions and stuff? Where at? You have any? Hold on, you got to say it a little bit slower and louder. Yeah, absolutely. Yeah, I agree. So we're not looking to invest in places where that's the case. I don't know how. I don't know how Californian landlords don't just take matters into their own hands and solve those things outside of the courts, because I don't know how I would respond if we had to wait 12 months to evict somebody who wasn't paying rent and was damaging the property. Any other questions so far? All right, so here's the strategy. Let's say market cap rate. All right, so let's say the market cap rate for a one of the retail spots. Let's say this is what we're looking for. We're not looking for Class A retail. That's 100% occupied. That's at market rents and has 10-year leases in place with, AAA credit tenants. We're looking for properties that we can come in and add value to, like I mentioned. And so, if the market cap rate, let's say for one of these buy above, let's say for one of these retail shops, the market cap rate is a 7.5. We are looking to go in there and buy it at an 8.5 cap or a 9 cap, for example, which is kind of what we're doing with the Pace Florida property. Traditionally, that market trades at like a 7.5 cap rate. Well, we're coming in and we're buying it at a 9.3. And so what that does with the Pace Florida property, just to give you an idea of the discount that we're buying it at, when it produces $135,000 worth of net operating income, and we are buying it with a 2 point cap rate spread, difference between what the market says it's worth, and what we're buying it at is about 2 points here. Oops, 135. We're buying it at a done. All right, so that means that it should be worth about $1.9 million dollars. If this were to sell in the open market and sell at market cap rate at about 7.5, but we're buying it at 1.45 million, 9.3 cap rate, which means we're buying it at about a $520,000 discount. So we're coming in, we're buying below value, and that's key number one, like we've always told you. And you want to buy above the market cap rate, right? That means if we bought it the next day we listed it, there'd be about a $500,000 spread there, solely based on the discount that we're buying the property at. Next, what you want to do is you want to raise the NOI. So the NOI on that page Florida deal is $135,000 right now because the owner is paying for some of the expenses. He's not passing them back to the tenants. He's not raising the rents the highest that he could be. And we are going to raise the rents or the NOI from 135 up to about 180,000 within the first 12 months. Now, the difference there is we're going to be raising the NOI about $45,000 within the first 12 months. And when you divide that by the market cap rate within the first 12 months, by simply just passing back expenses and raising the rents, we're going to be creating out of thin air $600,000 worth of value, which is the difference between current NOI and what we're raising the NOI to. So within the first 12 months, the value that we're adding to the property and the discount that we're buying it at is about $1.1 million dollars that we're set to make within 12 months of buying this property and simply just raising the rents and passing back expenses to the tenants. Now, the reason that it works with this property in Florida is if a lot of these tenants were on 5-year leases and they just signed those leases, we couldn't go in day one and raise the rents, right? They're locked in their leases for the next 5 years per the terms that the current owner had signed with the tenants. But we are, the owner had them on annual leases, so they renewed every single year. And he says he did this because he wanted an opportunity to raise the rents every year on the tenants, which makes sense in theory. But you could also sign longer leases with scheduled rent increases per that lease. But it really helped us out in making this property make sense because if we had to wait 5 years to raise the rents and pass back expenses, this property wouldn't be as attractive as it is because we're going to be able to do it day one. So a lot of these tenants, their leases have come up for renewal or they're going to renew within the first 6 months uh, between January and June. And on renewal of those leases is when we're raising the rents and passing back the triple net expenses. Now, the annual leases did make this property slightly more difficult because banks did not want to lend. Um, they did not like the annual leases. It didn't seem as secure to them. They wanted to see longer term leases, such as 3 to 5 year leases. So, in order to get this deal done and also get good debt, we had to approach the tenants with current owner and get the tenants to sign letters of intent on the leases that they'll be renewing at with the 3 to 5 year terms, the higher rent amounts, and passing back the triple net expenses. And so, you want to raise the NOI. This is how you're going to make your money, and this is how you're going to ultimately add value to the property. So, in 2024, uh, the Federal Reserve and Jerome Powell and everything you hear on Google and YouTube and CNBC and Fox Business News and whatever you listen to, they're telling you that in as of this morning, they were saying that inflation is down to 3%. we have seen the end of the rate hikes. We've already seen the peak, and in 2024, we should start to see a decrease in interest rates, whether that is 25 basis points, which is a quarter of a percent. Um, we don't really know, but they're telling you that rates are no longer going to rise. Inflation has been tamed. We're avoiding a recession. It depends on who you listen to, because that's 9/10 of the conversation, and then 1/10 of the conversation says that that is inaccurate, and they don't see it possible for us to avoid a recession. And unemployment rate, I think, is at like 3.5 percent right now, as of this morning in the latest report. Um, but anyways, everybody's telling you that things are going to be fine. Rates are no longer rising. The residential real estate market, so did commercial real estate. Um, Commercial real estate last year, I think there was about a 70% decrease in transactions being sold in the United States. I want to read you some data here. This is taken from a Zoom call that Matt's on right now. So I don't have a whole lot of context to this data. But currently, right now, it is with commercial real estate. There are 3,000 plus properties with floating variable interest rate loans. There are 25,000 plus properties that were bought 2020 till now with 2 to 3 year durations, which means that their loans are going to be coming mature. A lot of those already did last year if they were bought in 2020. But 2024, 2025, there's a lot of commercial real estate debt that is going to be maturing, and therefore putting the sellers or the owners in a potentially distressed scenario, because they're not going to be able to refinance out depending on what they paid for the property and what their current interest rate is. Assumable debt, there's about 3,000 plus properties with loans that have about 5 to 7 years on duration left on the loans. Construction loans maturing until July of 2024, 400 plus properties. And properties with a low estimated DSCR, less than about 1.05. There's about 2,500 plus properties. And so what all that means is that there is going to be some distress within commercial real estate. It's the same thing we've been saying to you for the last 6, 7 months. This is fully what we've been looking at. I've got, like I mentioned, a list of all the properties that we're tracking across the United States for retail, industrial, multifamily, and a lot of these properties and these sellers are going to be put in uh, unfortunate situations when they are forced to sell their property due to a low DSCR, due to their debt maturing and not being able to refinance it due to a low DSCR, uh, or they just can no longer afford to continue to hold on to the property. There's a 36 unit multifamily property in Corpus that um, we're looking at, and this property was bought for $3 million, I think, a couple years ago, maybe 3 years ago. Guy from Oregon, out of state investor, for some reason bought this property for $3 million. It definitely wasn't worth that at the time, and he overpaid for it. And right now, he is trying to sell the property for his principal balance. So he's going to lose about 1.1 million. He owes about 1.9. He bought it for 3, trying to sell for around 2, and he's going to lose, $1.1 million give or take, especially after commissions, closing costs, and everything on this property he bought and overpaid for. And that's what we're running against. Thankfully, this guy had. Uh, I'm not even sure that it's worth his principal balance. Honestly, definitely not, given its current condition and where the income statement is at, and where he's got the tenants at, and the occupancy of the property, it's not even worth what his principal balance of the loan is. And these are the types of situations that we're going to see all over the United States until rates do drop. Now, if they drop 25 basis points this year, what does that really mean? Doesn't really mean a whole lot. But until rates start getting down into the fives, the high fours, these sellers are going to be in very uh, distressed situations. So that's what we're looking for. Is and here's your strategy: look for distressed sellers. And again, these are distressed sellers. These are not distressed properties. You want to buy a good property that has a distressed seller. Uh, sure, you can buy distressed properties that are owned by distressed sellers, but it'd be much better if you buy a good property that's owned by a distressed seller due to their financial situation with debt. So look for distressed sellers, buy below, or sorry, buy above market cap rate, because this is where you're going to create some value, and buy a property that you can add value to. Yeah, by raising the NOI. Now, if this is what we're focused on, if you want to, if you want to, uh, and by the way, I'm not saying don't go buy single family homes, duplexes, triplexes, quadplexes. We own a lot of them. Matter of fact, if you want to buy some, you can come buy ours. I'll sell you our portfolio, and but they're not bad to buy. It's just right now, this is what I solely want to focus on, and this is where the opportunity is. Buying a single family home for, you know, 200 grand and appreciating, 10% a year, maybe 5% a year, 3% a year, and you break it even on cash flow isn't uh, that great of an investment, in my opinion. And we accumulate, and man, we bought all our entire portfolio. We bought it at the best time possible. Had we bought this portfolio at a different time in history, it wouldn't have done as well as it did when we bought it. And we bought it, like I said, when values were increasing 42% year over year. So we're making money hand over fist. We didn't have to do anything to the property. There was low inventory for single family homes, which there still is. There was extremely high demand and low inventory for rentals in Austin, Texas, and the submarkets. And so we just made a killing buying single family homes, duplexes, triplexes, quadplexes, eightplexes. Um, but today, moving forward, at least where everything is at today, I don't think that that's the smartest play. I think that buying these properties, you'll make way more money than you could otherwise buying, some single family home with a bad tenant as a rental. Because you're just, I mean, unless you own these straight cash, you're never going to make anything substantial, right? And I'm sure it depends on what market you're in, but in a market like Austin, Miami, Denver, Phoenix, you're never gonna make any, cash flow by owning these properties. Triplex, duplex, quadplex, the higher the unit count you get, the higher the chance you have of making some cash flow on it, but it's gonna be very hard for you to do so. You get 1.5 months of vacancy every year. If your property manager or leasing agent is not doing a great job keeping it leased out, you have to replace one water heater, one AC unit, do one single make ready. These properties can't even afford to, if you own this one property in one LLC, in order to pay for the bookkeeping, the CPA to do the tax return, uh, you know, you're just never going to make any money. You're going to make money on the appreciation and holding on to that property, but really the only time you're going to truly be able to capitalize on the value uh, that you have with that investment is when you refinance or sell it. And if you refinance and do it at a bad time with a bad rate in bad terms, then you're going to lose money every single month and every single year going forward. But if you refinance at a good time, pull all your money out, still break even, you're likely still going to lose money. But if you pull all your equity out and go reinvest it, it could do you well. But we're not focusing on buying those properties this year. Uh, we're focusing on buying the ones that I told you that we're looking at: industrial, retail, and multifamily. And for those of you who are sitting here thinking, well, yeah, that's great, Alex, but I don't have $5 million to go buy one of these properties. Well, neither do we, Cash. We partner with investors. We raise capital, we get debt on the properties, and you don't have to go out and buy these alone. And I think a lot of people here probably should be honest with themselves too. I have Matt and have talked to a lot of you guys uh, individually on the internet, whatever, for the last 5, 6 years, and have really tried to explain how to do what we do, and also explain what's required to do what we do. And I think the truth of the matter is that it's definitely not a fit for everybody. It takes 24/7 work. You got to constantly be sourcing deals. You're at constant competition with other people in the marketplace who are doing the same thing. You have to constantly make sacrifices. It's an endless, it never stops. And it requires so much effort on your part to do it correctly that I think that a lot of people may rather explore investing passively. Allow somebody else to go out there and do all the work that's required to be an active real estate investor. You invest passively in the deal and still make great returns on the Florida deal. The investors who are investing in that with us are going to be making 14% plus cash on cash returns. It's like a 2 to 3 x equity multiple on their investment within 2 to 5 years, however long we hold on to it. Within 2 years, we're going to be either refinancing the property or selling the property. And if we refinance, all the capital will be given back to the investors. They'll be in it for nothing, and they'll still be receiving the same amount of cash flow plus and receiving infinite returns. And so maybe in 2024, your strategy is to find a good operator who you want to invest with. Because if you want to go out and source these deals yourself, or whether it's single family or wholesaling or fix and flipping, whatever it is, it's more than possible, but it's going to require a ton of effort and work on your part. And just be ready to put it in and make all the sacrifices required to be successful. Any questions? If you want to explore um, investing with us, or any of the deals that we got, or any of these deals that we're finding right now, I got a list of 130 that we're pursuing. Reach out to us. Go to our website. Can you put that in the chat somewhere? Go to our website, typekeywrealestate.com / go to the growth fund page and just have them submit it there. What's the URL? typekeywrealestate.com. All right. typekeywrealestate.com / TRE growth fund. We should just change that to fund. But go there, reach out to us, send us a DM. We've got like I mentioned, we've got that Pace Florida deal. That one's oversubscribed. We already have that one locked in. Uh, Next, we have a few opportunities that we're looking at. One of my favorites is this deal in outside of Dallas, 125 slot RV park, Class A RV park. You see, we got pickleball courts and a pool, all concrete. 20 minutes from Dallas, 40 minutes from downtown Dallas. It's a great deal. And if you want to be in on any of these deals that we're doing, just reach out to us, submit that there, send us a DM, however you want to get in touch. What does it take to get a deal done? Who asked it? Cat can't even pronounce your name. What does it take to get a deal done? So, I mean, at least uh, to be very good at getting, because anybody can get lucky. I mean, you can go on the MLS and Zillow and buy anything you want to. I wouldn't consider that a deal, though. So I guess you have to define deal. To define deal the way that we define it, like life changing, uh, generational wealth, uh, gonna make you a ton of money. I'd say that you have to, if you really want to be a good deal finder and do lots of deals, I'd say that you're going to have to put in a minimum of 10,000 hours, the practice of finding deals. Analyzing deals every day, making offers on deals every single day, talking to sellers every single day, talking to agents and brokers every single day, knowing your market and knowing how it's changing every single day. What is the rent for a single family house sell for? What are single family houses selling for in this neighborhood? What are duplexes, quadplexes selling for? What are apartment units, one bedroom, one bath renting for? Two bed, one bath units renting for? What is land selling for within the market? Who are the players in the market? What are the players buying in the market? Who are all the costs that go into renovations? What does it cost you to remodel an entire house, from the flooring to the paint to the sheetrock to the light fixtures to the bathroom vanities to the kitchen countertops, kitchen cabinets, foundation, roof, etc. There's thousands of pieces of information that you need to know uh, to, and that's just with existing stuff and available data that you can go get today. But then you also need to know what's coming, who's coming, what jobs are moving here, what are the new developments that are coming up, where are they coming up, why are they coming up, what are the new subdivisions being built, etc. There's thousands of pieces of information that you should be taking into consideration when analyzing a deal to see if it's a good deal or not, on top of what you're projecting it's going to do. And so, first of all, you need to have all of that knowledge. Second, you need to know how to negotiate and make offers. Third, you either A, need to have the capital and the ability to get the financing, or B, you need to be able to partner with somebody who has those things. Uh, and then uh, you also just need to not be scared to lose all your money potentially, because it is possible that the market shifts. You make a bad decision. You have bad pieces of data, and you need to be willing to walk through the fear to make these investments and continue forward. And uh, you're gonna, especially when you're just starting out, if you don't have a ton of money, you're gonna have to make a ton of sacrifices that you're not going to want to make. You're going to have to sacrifice comfortability and what you want to do and your dreams, and buying, some perfect home that you want to live in, and going on vacation, and all this stuff. You're going to have to, likely, if you don't have a ton of money, sacrifice those things for the pursuit of investing. for a better future than you otherwise would have. Huh? Yeah. So that's just part of what's required. Sleepless nights, stress, gray hairs, a whole bunch of shit that you're not thinking about. So, any other questions? 2024, it's going to be a really exciting year. There's a saying uh, commercial brokers and sellers have right now, and it is survive until 25. Survive until 2025. And what you're looking for is those who aren't going to be able to survive. You're looking to go pick them off and pick those properties off and buy home runs. Yeah, not traditionally, but we have a project down in Kingsville, Texas, that we partnered with Madelone Development. The question was, do we ever build? Matt and I don't traditionally, but we have a new development project in Kingsville. It's actually like redevelopment. I don't know if they're actually building something from the ground up, but it's the old elementary school in Kingsville, Texas, and with our partner Madelone Development, we are going to be redeveloping that property and turning it into retail, just like they did in Taylor, Texas, with the old Taylor High School. They turned that into retail. We're going to be doing the same in Kingsville. So that is the first project that Matt and I are doing in regards to development. You're welcome. Are you ready to do all those things? If not, seriously, look, not everybody has to. The only reason I'm saying all that is that I don't think a lot of you guys want that. A lot of people say that they want to become financially free. They want to, cold call sellers. They want to find off market deals. They want to invest in real estate and do all these things in an active way, such as you doing it all on your own or building your own teams, et cetera, to do it for you. And I don't think a lot of you guys really want that because it's horrible. I mean, it's ruthless. It requires so much of you and of your desires that I really don't think that a lot of people are going to actually put in the work to accomplish that. And especially at a scale that truly makes sense. And so the only reason that I'm saying all that is that if you really don't want to do all that and put in all the work that's required to do all of that, and if you want to still invest in real estate, you can invest passively. Go find somebody who is doing all of that stuff and just invest with them. You are going to reap a ton of the rewards. Yes, they are going to get paid for their work, but you're still going to get to experience all the benefits of owning real estate without doing all of that work and still receive extremely high returns if you're investing in good deals. And so that would be my suggestion to those who are wondering, in 2024, do I want to go out and do all these things? If the answer is probably not, and you just want to invest some capital that you have in real estate, I would highly recommend just investing with an operator that you trust, has a proven track record. You know is going to be able to go out there and find good deals and just save yourself all the headache because it's not for everybody. Uh, those who do it are psychopaths, and it's not a whole lot of fun. So I would recommend finding somebody to invest with so that you can still live your life however you want to and still experience all the benefits of owning real estate. So that's it. That's the strategy. If you have any deals and you want to partner with us, send them to us. If you want to invest with us in any of these deals that we're finding, reach out to us, and we'll see you next week.